Good morning, everyone. Thank you so much for joining us. My name is Bella Alvarez. I'm a program associate at the Intentional Endowments Network, and we're looking forward to the conversation today on natural capital risks and biodiversity risks with Green Century Capital Management, CDP, and Schroders. So before I begin, I'll just give a brief overview of the Intentional Endowments Network for those of you who are not familiar with our work. So the Intentional Endowments Network is a peer learning network that has over 200 members. We're composed of a mix of asset managers, asset owners, nonprofits, and other partners in the space like CDP and Series. And we prioritize working with endowments to invest for an equitable, low carbon, and regenerative economy. And we do that through resource exchange, education and training, and forums and meetings such as these. On our website, you can read a little bit more about our commitment to JEDI, which is a cornerstone of our work. So before we begin, I just have a few logistics tips to run through. So this webinar is being recorded, and you will receive a copy of the recording after the call. If you have to comment or request any technical help, we ask that you use the chat function. If you have any questions for our panelists, which we will be considering later in the discussion, we ask that you use the Q&A function. Participants will remain muted for the duration of the webinar, and we ask that you're present. Maybe grab a notepad or a drink and really keep yourself engaged in the conversation. So our panelists today are Monique Iwerton, Senior Associate at Capital Markets at CDP, Annie Sanders, Director of Shareholder Advocacy at Green Century Capital Management, and Stephanie Williams, a Sustainable Investment Analyst at Schroders. So we're delighted to be joined by these three IEN members today, CDP, Schroders, and Green Century. Of course, they've all been doing amazing work in the natural capital risks and biodiversity space with deforestation and a number of other nature-related risks. So to kick us off, I will turn things over to Monique, who will tell us a little bit more about CDP's strategy and the work that they're doing. So Monique, over to you.
Thank you so much, Bella, and welcome everybody. So I'm really excited to be here today and speaking to you all. Some of you may already know us and be CDP kind of signatory members. Others might not. And so I'll just give a kind of brief overview of CDP and what we do. Bella, are the slides still up? I can't see them. Perfect. So a little bit about us. We are an environmental nonprofit. We've been around for just about 20 years. And you may know us from our previous name, Carbon Disclosure Project, though we changed that a few years back because we don't just focus on carbon anymore. If you go to the next slide, Bella, our focus is data collection, right? So we essentially hold a repository of environmental data that's primary because we collect it directly from companies and governments as well. And the reason we do this is to inform the market, right? To kind of increase transparency and get the data that we collect out there. Next slide, Bella. So we have a few different stakeholders that we work with, one of which are financial institutions like Schroders and Green Century, who are part of our kind of network of capital markets actors, as we call them. Again, some of you on the call may be part of that network or not, but essentially those who get access to that reported data, can also join campaigns and other efforts. But this is part of our lever of change, which you can see in the next slide, a kind of graphic just illustrating how all of this works. So we have what we call an authority, in this case, right, the capital markets actors, investors, asset managers, asset owners, also banks that support us in going out to companies and saying, please give us your data, right? So that it's not just coming from an NGO, but there's some weight behind it and some demand behind it. And then companies report, right, along three main issue areas: climate change, deforestation, and fresh water. That's why we're, relevant to this nature conversation, is we've been working on a few specific nature-related issues for quite some time. And then we feed that data back to essentially enable, right, better engagement, more informed investment strategies, etc. Now, the next slide, I'll kind of talk about our vision moving forward a little bit, because I think we're, folks tend to know us, like I said, for the climate related work, but really we're considering ourselves an environmental platform. And in order to be that, right, we essentially want to be able to cover and expand to all relevant planetary boundaries and the relationships between different environmental issues. And so we have this vision by 2025 to accomplish this. It's no easy feat, but essentially we want to be able to contribute to enabling both the restoration of ecosystem health and reducing emissions in line with 1.5, right? And so everything we do is related to, expanding along these lines in order to increase transparency around environmental impacts and enable financial actors to hold companies accountable, right? And enable them to do just that, right? Promote that accountability. So now that I've gotten, CDP in a nutshell, I want to talk a little bit about nature risk, and why nature risk is particularly relevant. And so, just pulling out kind of a few key publications in the space here, just a few stats as to the financial impact, right, and the impact to business that nature loss is having. And so, just in summary, right, losses to biodiversity, to ecosystems and ecosystem services have been estimated and do pose huge financial risk. And there have been plenty of calculations made, some by the World Economic Forum, by PwC, BCG, and others, estimating that, for example, 44 trillion of business value is highly dependent on ecosystem services. I think it just goes without saying that the global economy is embedded in nature, right? It's not external to nature. It's fully dependent on it. The people have also tried to estimate the value that these ecosystem services present to us, and that's been estimated at about 150 trillion per year, with the cost of loss exceeding 5 trillion. So we're already kind of seeing that those losses materialize. And then, to kind of dive into one specific example more recently, if you go on the next slide, Bella, the WEF annual kind of global risk report, right? We just got the latest for 2024 a few days ago, and really biodiversity and ecosystem collapse has been rising up the risk report as the years go by. So this time around, it's now perceived as the third most severe global risk to materialize within the next 10 years. So again, the time horizon here, I think there's definitely a bit of a mismatch, right? That this is being identified over a longer time horizon. But nonetheless, right, very important that this is being recognized at this scale, and that it's the recognition is essentially and the severity is essentially increasing. And so, why now, right? Why are we kind of all coalescing around this issue? In 2023 and 2024, definitely a few things that happened over the past few years that I know Stephanie and Annie will touch on a bit, but just to kind of lay the foundation, there was a lot of work leading up to COP15, or the Biodiversity COP, a few years ago, right? It was December 2022. And part of that work was the establishment of the Taskforce on Nature-Related Financial Disclosures, which was established in June of 2021 by folks like WWF, Global Canopy, and a couple others, really to mirror the climate equivalent, right, that most of you are probably more familiar with, the Task Force on Climate-Related Financial Disclosures, but to do something similar at a much broader scale, broader scope, having to do with nature. And so that's what's now materialized. So as of September of last year, there is now a final framework under the Task Force on Nature-Related Financial Disclosures that includes disclosure recommendations on nature. So these are recommended disclosures for companies and financial institutions, again, to kind of increase transparency and it basically dictate, right, what is most relevant for them to provide in terms of nature-related information. I think it's important to note the parallels here. So there are 14 TNFD recommendations, 11 of which were carried over from the TCFD. So the language is very similar, at least anywhere that it could be, right, with some adaptations to encompass nature more broadly, which I'll get into some of those semantics in a bit. From our perspective as CDP and the data we collect, we have kind of mapped already that there's quite a bit of overlap simply because we aligned with the climate equivalent a few years back. And so even some of the nature-related data that we collect is already in a format that's relevant to the TNFD, but there's more that we need to do. And this pyramid here, this is just pulled directly from the framework, just goes to show also how much they've done. They really put a lot of focus on providing supplemental guidance, which is fantastic. And so in addition to those disclosure recommendations, there's also a guide for analysts and such internally to organizations to actually do the assessment, right? The nature, risk, and opportunity assessment necessary to disclose, right? To have that background information, as well as a ton of other guidance. And so to kind of take it back to basics a little bit, because I know these terms can often be conflated, there is a difference between nature and biodiversity. In the market, I think we're using them pretty interchangeably, but I think it is important to differentiate here that at least following the TNFD definitions, which are based on kind of established frameworks and such, nature refers to the natural world and includes people. And so it can be understood under the construct of 4 realms. Sounds very futuristic, but that's the kind of language that's used. So these 4 realms are land, freshwater, oceans, and atmosphere. And society, people kind of sit in the middle of that. Biodiversity is a characteristic of nature. It's the quality of life, right? It refers to the variability of life, which you can really think of as an essential piece of nature, but it's not nature in and of itself. And also critical to everything we talk about in terms of nature. If you go on the next slide, there's probably too complex of a graphic, but hopefully I can simplify it a bit. Is this concept of impacts and dependencies. So in the climate space, we've heard of risks and opportunities for quite some time, but I think this terminology is maybe a bit newer, unless you were in the conservation space before. But it's just this notion that businesses, right, have activities that lead to impacts on nature. Those impacts are sometimes called impact drivers. They're sometimes called pressures, but you can think of them as, there's land use change, also sea change and freshwater change. There's climate change is considered an impact driver. There's pollution. There's natural resource use and invasive species, which that last one I think is a bit, we tend not to touch on because there's just less data on it. All of these things, right, are things that businesses do that impact nature. And those impacts, those impact drivers, lead to changes in the assets that we have in nature, the natural capital. And those assets are really important because they lead to flows known as ecosystem services. And so those flows are what we essentially depend on. And all of this kind of leads to changes in what's happening in nature, in the state of nature, right? And there are a few indicators which we can touch on later, but all of this to say, right, that impacts are leading to changes in nature, and then those changes actually affect businesses as well, because businesses are dependent on those flows, are dependent on those services. So it's very much a feedback loop where if you take, for example, the food and agriculture sector, right, a very high impact sector, it's one that both depends very heavily on nature, right? Depends on those services like pollination, like crop production, water provision and quality, but then also is largely negatively impacting nature and the ability for those services to exist in the first place. So there's this feedback loop. Then in the next slide, just adding, tacking on the two concepts that we're maybe more familiar with, impacts and dependencies, risks and opportunities. This just refers to what happens after, right? Those impacts and dependencies. It's, the risks that materialize to business, and there are also opportunities that can materialize as well. Now to just tie a little bit of those pressures, right, those impact drivers to our work and the data we collect, there's definitely overlap, right? So as far as CDP data goes, we collect data under these main buckets: climate change, deforestation, and fresh water. And over the years, we've tacked on additional topics like plastics, like deforestation driven by metals and mining, not just by commodities. And we most recently added a few questions on biodiversity as well. So they're all very much connected, but kind of a bit siloed, because that's just the way that these issues, I think, over the years have matured, is they tended to be seen in these separate buckets. And that's what we're seeing change now. So the next slide is just a diagram on trying to illustrate this climate nature nexus a bit and why all of this is now converging. I won't go into too much detail here, but just to say that the linkages are there, right? So forests, for example, have a huge impact on climate change, right? Both as a carbon sink, but also when forests are cut down, right? There's emissions released as well. So there's that duality. Forests are also really important for the provision of water. The hydrological cycle and transpiration of trees, et cetera, is very important for the provision of fresh water. So all of it is connected, necessitating a more holistic approach. Just to illustrate a few, don't expect anyone to read this, but kind of, how to translate this into action, right? It's still important to take these specific issues and understand, what's necessary to drive change within them, but also, again, how they roll up. So deforestation, I think, is one we'll talk a bit more about today from, and hear from Stephanie and Annie as well as what their organizations do. But I think it's, again, just one of those issues that's been more mature for a while. So it's more clear the actions that companies need to take. So this is just a diagram of 15 actions that we've outlined in accordance with a few other external parties on, what are the essential things that companies need to be doing to remove deforestation from their supply chain. So just to say that this level of information is out there and something that can be acted upon already. And then very lastly for me, before I pass on to Stephanie, just to Annie, just to illustrate here, to kind of wrap all of this up, right? You can already use data to drive company action on nature. Doesn't have to be on deforestation, only on deforestation, but also on fresh water, on biodiversity a bit more specifically now. But that, there's direct engagement, there's benchmarking, there are efforts to engage to ensure accountability, right? Tracking year-on-year progress. There are lots of campaigns, right? Not just through CDP, though we have some ourselves, but there are also other initiatives out there. And from our side too, we do have quite a bit of focus on deforestation. And so that is something that we provide additional support to our members, those that want it and are willing to kind of engage more specifically on deforestation, know that we're here to help. And so with that, I will pass to Annie to talk about Green Century and its active ownership strategy and everything in between.
Great. Thanks, Monique. Okay, next slides are coming. All right, so I will give a brief rundown on Green Century before diving into our work to mitigate biodiversity risk and how we engage with companies on a lot of the issues that Monique just spoke about. So you can go to the next slide, please. So Green Century was founded in 1991 by the public interest research groups as the first family of fossil fuel-free, responsible, and diversified mutual funds in the US. And our approach to impact entails screening out environmentally dangerous industries, and we choose companies using best-in-class ESG criteria. And then 100% of the net profits from Green Century Capital Management's work actually go to supporting the environmental and public health nonprofits that founded us. So that's a unique prong of impact that we have, I think is unlike any others that we know of. And we also lead an award-winning shareholder advocacy program. So the advocacy approach that Green Century uses to engage companies goes beyond seeking information and forming analyses to actually pressuring a company to change a policy or practice. You can go to the next slide. You can see a few highlights throughout our history here. So notably that we secured our first deforestation agreement 10 years ago with Kellogg's to improve their palm oil sourcing policies to make sure they weren't destroying rainforests for the palm oil that they use in their snacks and cookies. And since Green Century started our work to protect tropical forests in 2013, our dozens of zero deforestation agreements that we've won with companies have helped to curb climate change and preserve endangered species around the world. And so Green Century has long worked to ensure protections for nature through our work to protect forests, native ecosystems, and threatened species that call them home, from orangutans to jaguars. And that's because biodiversity loss is a global systemic risk, as Monique touched on. You can go to the next slide. Thank you. Wildlife populations, I think a lot of folks probably know some of this information, so I won't dwell on it. Also, it's a little depressing. So wildlife populations have declined by an average of 69% since 1970, with an estimated 1 million plant and animal species at risk of extinction by 2050. That's a quarter of all species on Earth. And while government regulation is catching up, we also feel that companies must meaningfully assess and address their impacts, dependencies, risks, and opportunities with regard to nature in this decade to avoid the near and long-term risks of global biodiversity loss. And so in recent years, our biodiversity-related work has focused on asking food companies and large retailers to eliminate deforestation, primarily. And then in more recent years, we've expanded that focus to include native vegetation conversion, which is essentially like deforestation, but it's the clearing of land that's not necessarily technically defined as a forest, but it still has a lot of forest-like properties and valuable ecosystem traits. And then also primary forest degradation, and that applies more so to places like the boreal forest in Canada, where timber companies or companies that use wood clear the land but replant it. So it's not technically deforestation, but it is removing a lot of the really valuable ecosystem traits of a forest, and so it's called primary forest degradation. So we've been working on those and related issues over the last decade, and so we decided to obviously continue that work since it is incredibly important, but also to double down on biodiversity as an engagement theme heading into FY24 and really tie together. You can actually stay back on the slides. Thank you. Really tie together the work that we do on forests and ecosystem protection to push companies to not only establish discrete policies to address these risks where relevant to their business, but also just to take a step back and more holistically address their nature-related impacts, dependencies, risks, and opportunities, so as to be able to set more informed, data-backed policies that mitigate their most material nature-related risks and ensure the sustainability of the ecosystem services on which they depend. You can stay on the slide. I put this in here because deforestation is, certainly the primary way in which we've historically worked to get a handle on biodiversity risk. As not only does it just very clearly and directly harm biodiversity, but deforestation is also a huge problem for the climate. We simply cannot limit warming to 1.5 degrees Celsius by the end of the century without eliminating deforestation in this decade. Food system is a huge driver of deforestation, the primary driver, in fact, of deforestation, and accounts overall for about a third of anthropogenic climate emissions. So that is why then Green Century has worked to reduce deforestation caused by the production primarily of palm oil, soy, and cattle throughout Asia and Latin America. And then, as I mentioned, we've also worked to engage companies around mitigating primary forest degradation in the Canadian boreal. So I want to share some examples of how we have used this tool of shareholder advocacy, informed in large part by data and insights from CDP, to secure concrete policy changes from major companies on these issues. So I'll go through a couple of examples and then talk a little bit more about biodiversity as a focus. So case number one here, one example is our engagement with Lowe's in recent years, where we filed a shareholder proposal calling on the company to eliminate deforestation and forest degradation in its supply chain. We, after negotiation with the company and productive dialogue, we ended up withdrawing that proposal in exchange for a commitment from Lowe's to issue a report that assessed how the company could increase the scale, pace, and rigor of those efforts to eliminate deforestation and primary forest degradation. The report's findings led the company to, at the conclusion of the report, issue a set of new industry-leading wood sourcing commitments last year that will help protect primary forests, which again are those undisturbed by industry and essential to biodiversity preservation and the fight against climate change. So that's one example. And then next slide, please. We also recently won an agreement with Hormel Foods to eliminate deforestation in their supply chains by 2025. So this was pretty significant because beef and soy, major ingredients, both directly and indirectly in Hormel's products, comprise 2 of the 4 leading drivers of deforestation globally, particularly in South America, in extremely biodiverse regions such as the Amazon rainforest and the Sahara savanna. And to produce its products, Hormel buys ingredients from high-risk regions throughout South America. So again, this commitment was fairly significant from that perspective. And then just in the last year, a couple of highlights from FY23. Next slide. So we engaged with Kraft Heinz, ADM, Morgan Stanley, and others, these are just a few, on deforestation and native vegetation conversion. Kraft Heinz, this was after a couple of years of engagement, a couple of resolutions filed, ended up expanding rather their current kind of global, or what was at the time their current global no deforestation for palm oil policy, into a global no deforestation policy, wherein they committed to eliminating deforestation from their supply chains by 2025, as well as native vegetation conversion by 2030, in some cases 2025 as well. And that commitment covers not only the big 4 drivers of deforestation, so beef, soy, palm oil, and timber, pulp, and paper, but also a set of other commodities in their supply chain from coffee and cocoa to sugar. So that is one of the kind of industry-leading comprehensive no deforestation commitments that we have seen. And then ADM last year committed to undertaking a feasibility study to eliminate native vegetation conversion from their corn and soy supply chains in Latin America, and then issue a correlated commitment based on what that study said for, in fact, eliminating native vegetation conversion from those supply chains. They actually just did that in November, a couple of months ago, and committed to eliminating native vegetation conversion by 2025 from direct suppliers and 2027 from indirect suppliers. So a lot of the engagements are very productive and lead to concrete policy changes. Morgan Stanley's on here as well because we also engage financiers of clients who engage in relevant activity that may drive deforestation, and so we work with banks essentially to improve their deforestation sectoral standards on the kind of 4 major commodities that drive deforestation. Okay, next slide, please. Okay, so I wanted to talk about how we use CDP disclosure data to support our corporate engagement, dialogues, and filings. And for that, you get to look at these lovely pictures of the biodiversity in question. Monique had a lot of great information about CDP, so I will spare you that and have you look at these pictures while I talk about that. Bottom line, for us, CDP has been an incredibly valuable partner and provides a set of tools that give us the information and help us with the analyses we need to equip us for really effective corporate engagement on these issues. So we regularly reference CDP forest reports for the issues that I'm talking about now, but also climate reports as well to ascertain a company's deforestation risk exposure in certain high-risk regions. It's helpful for learning more about the company's policies, commitments, certifications, traceability, and direct and indirect supplier engagement, and more. So there's just a ton of data in that platform that's really helpful for informing the kinds of the direction that we take, the companies we end up deciding to pursue engagements with, and the questions that we ask in some of those engagements. And so there's that just the repository of data, which is incredibly helpful. And then through briefings and consultations with extremely knowledgeable CDP staff like Monique, we're actually able to effectively identify potential risks, challenges, opportunities, peer comparisons, to help support our own research, as well as just getting recommendations and references for external standards and approaches that companies should be using to assess their nature-related risks and opportunities, as well as inform their biodiversity-related policies. And a lot of this stuff is cutting edge and kind of most up-to-date information. You can go to the next slide. In terms of key engagement asks on biodiversity related issues going forward, we in FY24 are continuing to work to ensure that our relevant portfolio companies establish policies for no deforestation and no conversion by 2025, in addition to engaging companies via Nature Action 100 and otherwise on undertaking this kind of holistic assessment of their nature related impacts, dependencies, risks, and opportunities. There are so many topics, obviously, that interface with biodiversity, including plastics and other water and waste related issues, that companies really do need to start taking this kind of arms around approach in beginning that kind of assessment of those impacts and dependencies. And I think companies, investors, international standard setting bodies alike have been grappling with what we need to do to become more nature positive and how we define what is good enough. And at the end of the day, we can't wait for the perfect nature positive methodology or biodiversity metric to emerge. The perfect one probably doesn't exist, but there are a lot of really good, reputable emerging frameworks and standards that, such as TNFD and Science-Based Targets Network for our Science-Based Targets for Nature. And those will help to clarify best practices and catalyze the kind of systemic change that we need for a nature positive future. And companies need to start using them now. And nature's everybody's business, so there's no company that can stand on the sidelines. That's all I got. Thank you. Over to Stephanie, I believe.
Thank you. A really nice note to end on, and hopefully I end up echoing some of those messages as well throughout the next part of the presentation. So just as we bring up slides on screen, I'll give an introduction to myself and Schroders. So Schroders is an international global asset manager with over $800 billion of AUM. We are ESG integrated across our assets, which I think is pretty, I suppose, unique in the sense that it's across such a broad range and has been at the center of what we do for a long time. I sit within the sustainable investment team specifically, and I'm a natural capital and biodiversity research analyst. And so today I'll just speak to you about the plan for nature that Schroders set forth in 2022, and then hone in a bit on deforestation as well as a particular area of commitment and efforts from our side. So if we move to the next slide, please. Maybe one after that. I was just going to start by reiterating, we are seeing such rapid momentum in terms of the regulation, the international discussion around nature. I mean, both Monique and Annie have touched on these topics before, but I think notable COP15 having led to international agreement around 23 targets for 2030, which are quite concrete. Some examples being the 30 by 30 deal, which is agreement of conservation of lands and waters, coastal areas and oceans, 30% of that by 2030. So international governments having to take concrete action in order to ensure that. But there's also quite a lot of sector-specific targets that came out of COP15 as well. So reducing global food waste by half and sort of reducing pesticide usage and chemicals and so on. So I think we're really at a turning point in terms of all of that has been agreed, but then it's sort of the how does this happen in practice, and then how does that filter down into company action in order to sort of comply with those targets and make sure that we reach those by 2030, but then also that broader sort of nature positive goal, which was outlined at COP15. TNFD we've spoken in depth about, so I won't go too much into, but just saying that this will really help with the guide rails of what investors should be looking for in terms of disclosures from companies, and will really help consolidate the kind of information that we can analyze. And then something that hasn't necessarily been raised in as much depth is the EU deforestation regulation, which we think is going to be quite drastically affecting companies operating within Europe, but more broadly as it comes into effect at the end of this year, and essentially requires very granular due diligence and traceability for high-risk commodities such as palm oil, soy, beef, and so on. And so has acted as a real catalyst in terms of having these conversations with companies, either at the sort of very high up in the value chain, producing the commodities themselves, but also those further down value chains, such as in the consumer goods side of things. So there is this momentum, and that is an exciting thing, but there's also then a lot of risks for companies and investors that need to be addressed as a result, and tangible costs, particularly in the context of things like the EU deforestation regulation, where companies might be fined up to 4% of their EU turnover, is just one example. Obviously, in the grand scheme of things, when we're talking about huge losses associated with the ecosystem service collapse, that might not seem very large, but it is definitely something that is notable. Next slide, please. I also thought it might be helpful to touch briefly on the US context specifically, because whilst Europe, I think, is definitely leading in terms of some of the biodiversity related regulation, there definitely is an indication of action on the side of the US. So whilst the US isn't actively party to the Convention on Biological Diversity, which sort of underpinned COP15 and the global biodiversity framework that was agreed there, the US did put out communications around that time and indicated its commitment to efforts to combat the biodiversity crisis. And there have been a few initiatives that have come out of the US, like the America the Beautiful initiative, which is in line with that 30 by 30 sort of conservation of land and waters, which I think is nicely in line with that global biodiversity framework. A big emphasis on nature-based solutions within the US, and I think that's quite an exciting space going forward, one that's relatively nascent, thinking about sort of the potential for natural capital as an asset class, as well as sort of simultaneously providing some of these conservation and restoration solutions. And that seems to be somewhere that the US is really capitalizing on and leading on. And then finally, a Forest Act bill, which could potentially mirror some of the work that's been done in Europe and actually more recently in the UK. They're coming out, the government, with a very similar piece of regulation, but this has somewhat stalled since it was proposed, and so it's a little bit of a question mark. So I note it, but perhaps don't have a clear outlook on what that will look like at this point in time. Next slide, please. So how are we specifically responding to nature? If we go on to the next slide, we released this plan for nature in 2022, which is essentially our statement of intent in accelerating a nature positive future. So we're outlining our sort of whole business approach to managing nature related impacts and dependencies, risks and opportunities, that language which will come up again and again. And 4 principal commitments sort of underpin our plan for nature, and you'll see the inclusion of climate on here because of that inherent intertwined nature of climate and natural capital. So committing to transition all of our managed assets to net zero by 2050. But I suppose the commitment on this page that I really wanted to draw out was our commitment to use best efforts to eliminate agricultural commodity-driven deforestation by 2025. And this was a commitment that we made at COP26 alongside many other investors, signatories representing $8.7 trillion in assets. And this is now driving a large part of our strategy when it comes to natural capital and biodiversity. I'd also mention that as of this week, Schroders also announced that we will be an early adopter of the TNFD guidelines. And so we'll be looking to report in line with those as of financial year 2024, so next year's reporting cycle, and are very happy to see many other financial institutions alongside us calling for this, because I think it sends an important message to investee companies as well, that this is an important thing to disclose against so that we can accurately reflect those risks and opportunities to our clients, but also more broadly to try and move capital allocation towards a more nature positive future. Next slide, please. So our plan for nature sets out sort of 3 ways in which we tackle nature-related issues. Obviously, everyone loves alliteration, so it's 3 I's. We have sort of insights, which is our research and proprietary models, which try to analyze and then provide conclusions about our investments when it comes to biodiversity and natural capital. Influence speaks to our sort of active ownership offering and efforts both on the engagement and the voting side to then assert influence over the companies that we hold and to try to push for progress. And then innovation is around the sort of creation of solutions within the biodiversity space. So trying to create products that are aligned with nature positive qualities. And this one, I suppose, is one of the more exciting but emergent areas going forward. I might just speak a little bit to insights on this page because I know many of you in the sort of pre-asked questions were looking for reflections on data and how to analyze. And so I suppose one of our starting points that I wanted to highlight within the insights piece was undertaking a broad brush but helpful materiality mapping for sectors when it comes to identifying impacts and dependencies on natural capital, so that we could then have a bit of a hotspot analysis across our holdings in order to understand where to hone in on engagement and also perhaps maybe investment decisions. So the way that we did this was drawing on the Encore data set, which many will be familiar with, but has a very helpful and interactive platform to help you visualize where those impacts and dependencies lie and how they're tied to, in the case of impacts, those 5 drivers of nature change. And I think because TNFD is framed in that 5 drivers of biodiversity loss language, the Encore tool is a very helpful way in. And SBTN has also leveraged a lot of the work there to help with that materiality mapping. So both platforms are very useful and I think a good starting point. So I thought I'd flag that here. Next slide, please. Natural capital is obviously a huge topic and I think might feel overwhelming at first, but probably would like to reassure you that many of these issues are things that you will have already been familiar with and thinking about. I mean, climate we've already touched on, but waste, pollution, water use, and so on are not unfamiliar. I think it's just that this is a reframing and perhaps creating a bit more of a holistic viewpoint around a topic rather than trying to think about these things in isolation. So I've just depicted how we end up framing and thinking about natural capital and biodiversity within Schroders and how we then structure our insights and our active ownership efforts. So biodiversity, we think about this at sort of the high level, whether that's governance and that sort of more top-down assessment of impacts, dependencies and opportunities, but then deforestation, sustainable food and water, and circular economy are 3 sort of principal themes within our efforts. And sustainable food and water and circular economy, we have sort of more detail on within our plan for nature and our engagement blueprint, which I'll go on to mention in a bit more depth in due course. But deforestation, I'll now go on and do a bit of a deep dive into for the next few minutes, and then hopefully we'll have some time for Q&A at the end. So next slide, please. If we go on to one more. Rehashing some of the messages already made, our deforestation commitment was off the back of multiple reasons as to why we thought it very important to try and join that initiative. Systemic risks, regulatory risks, risks linked to consumer and investment sentiment. So both consumers and investors, clients, feeling a lot more passionately and understanding the importance of deforestation within the broader context, and then the inherent operational and supply chain risks that can occur as a result of deforestation activities. So essentially all of these boil down to the fact that there is a significant risk, the value of the investments we manage that sits on top of the issue of deforestation. So in the next slide, our sort of 4-step approach to delivering on this commitment was identifying which assets across our portfolios were particularly at risk when it comes to deforestation, engaging with those to ensure that they align with our expectations, monitoring their progress over time, because obviously a 2025 timeline is relatively tight, and then escalating where we are not seeing sufficient progress. In terms of identifying those at-risk companies, there are a real range of deforestation and forest-related data sets that I think can prove very useful for investors starting out on their journey when it comes to deforestation. CDP definitely being one of the principal ones that we use, but also highlighting organizations such as SPOT, which is a commodity-specific assessment coming out of the London Zoo, and Forest 500, which comes from an organization called Global Canopy. So rich data that's been built up over time. We're not just starting from scratch here in terms of identification, and there is coalescence of the companies that we should focus on. Next slide, please. In terms of setting out our expectations, we have published an engagement blueprint which outlines what we would expect companies to do in line with the various areas within natural capital and biodiversity. We have a particularly detailed set of expectations around deforestation in light of our commitment, and I won't dwell on the detail of these slides at this point in time, but hopefully those will be sent out afterwards, or you can find them within our engagement blueprint or biodiversity position statement. But in having this sort of robust set of expectations, this helps us to monitor progress over time, and to feel comfortable and confident that the companies that we hold are taking sufficient action. Next slide, please. In order to help with that monitoring, we developed a sort of data-driven deforestation scorecard that we use in-house, but I think there is a lot of bottom-up analysis that is also required in tandem, because the detail that comes through from company disclosures and the complexities that come with sort of certification schemes and traceability levels and so on in the face of deforestation does need that sort of two-pronged approach. So we do draw down on, as I said, multiple data sets to inform something like our deforestation scorecard, but then look to have the conversations and scrutinize the disclosures of the companies to make sure that we're building up a detailed picture, because ultimately, if we're not happy with what we're seeing, then that engagement escalation can be executed in line with our sort of broader engagement stance in-house at Schroders, which is outlined on the right-hand side, whether that's sort of publicly stating concerns, voting, or ultimately perhaps divestment. So we will see how this all pans out in 2025, as many are operating on that timeline. But conscious of time, I will pass back to Bella for the last 10 minutes.
Thank you so much, Stephanie. Oh, I'm sorry, Monique. I'm just going to pass it over to you. I know we had a couple of questions for our panelists, so if you wanted to get into that.
Yes, no, I'm just looking in the chat as well, and we have a couple of Q&A questions. I just tried to type in one as well. I think just hearing, a few of the things that both Annie and Stephanie touched on, maybe we can start with the question from George on, how realistic do you think, in both of your experiences and your perspectives, is it going to be, or has it been, for particularly small teams to kind of onboard the breadth of TNFD expectations, right? And I think, we've seen an example from Schroders, which is a relatively large, larger firm, and how this can be implemented. But any advice that you could give for small teams? Stephanie, you mentioned Encore, right? For maybe tools to start with, or issues to specifically start with that would be more manageable for small teams, I think would be helpful. Stephanie,
Yep,
if you want to start.
I can start, of course. I definitely have sympathy for the sort of potential for overwhelmed nature of this. I think ultimately this will actually simplify things, because at the moment, companies have been disclosing all manners of ways across some of these topics, and there hasn't been any kind of consolidation as to what to look for. So hopefully now that the TNFD has set out a suite of sort of core metrics, that will end up becoming a real common reference framework. So I think it will help, but there will be a bit of a bumpy ride when everyone's moving towards those metrics. That being said, in terms of where to start, I do think tackling all of the natural capital and biodiversity topics in extreme depth is probably untenable. So honing in on particular areas that you think your firm can sort of add value and then become knowledgeable and drive progress in is a lot more important than spreading yourself too thinly. So deforestation is obviously one that many firms have taken quite like a strong stance on, but there are particular areas such as plastics, for instance, which I know we're going to see a lot more focus on, given the Global Plastics Treaty is sort of coming to a head this year, that I think many will become sophisticated and knowledge will go up the curve on that front. So yeah, I'd probably hone in. And then in terms of entry-level toolkits or helpful resources, the Finance for Biodiversity Foundation have a lot of really useful intro tools and reports on their website. So I'd suggest starting there, and TNFD even have a sort of TNFD in a box resource, which might be a good starting point too. I'll hand across to Annie if there's anything to add.
No, yeah, echo everything that Stephanie said. And then, yes, I think Monique mentioned this too, but deforestation as a topic area, I think, is more mature than some of the others perhaps inherent in the TNFD framework or biodiversity broadly, but a lot of them are getting there. But deforestation is a good place to start. There are, I think, standards that many in the field have coalesced around as kind of the what we need to do line, which is 2025 eliminating deforestation. Plastics, I'd echo that as an emerging space as well, and something that we've engaged companies frequently on. And I think CDP water is now including plastics disclosures in that report, so that's helpful, and CDP is also a very helpful resource.
Thank you both. And I was also going to echo for kind of broader just nature upskilling, the TNFD in a box modules are I was looking at them the other day, and they're quite good. And even just the first module is kind of an intro to nature and why it's important to begin with. And I think one of the questions we got in from registration in advance was also on internal buy-in and how to kind of position nature in a way that will help firms, it may be small or large, right, kind of gain that buy-in internally and in a way that relates it to climate. And I think, hopefully we touched on that throughout with trying to illustrate that nexus, right, and how to make those points. But I think it also, just relates to what Annie and Stephanie both said on kind of starting with maybe one topic or a set of topics that are more mature, where the link to climate is more clear, and that could also help. Just looking at a few of the other questions here. There's one question from Jessica on strategies for companies to halt deforestation, in conjunction with growing food demand and a growing population. And I know there are lots of ways to answer this, and I'll maybe just kick off to say the Science-Based Targets Network, which I think both Annie and Stephanie referenced, is doing a lot of great work trying to create the methodology in line with science that relates to land. And so there is a methodology out there already that companies are piloting that's called the land methodology. And the kind of three targets within that are no deforestation, no conversion, right? So, or no conversion of natural ecosystems writ large. But then also land footprint reduction, which is really about land occupation, which I think one of the main questions that comes out of that is this notion of how do we reconcile that with growing demand, and I think the Science-Based Targets Network is going to publish action-oriented guidance later this year, trying to kind of outline specific types of actions that companies can take, but there are processes relating to, increasing yield on existing land that I think we'll have to see companies rely on. And then the third target is landscape engagement, really trying to put this perspective that companies need to look beyond their individual supply chains and establish these partnerships at landscape scale. And so that's seen as basically one way to address deforestation while also kind of including people, the needs of people. And so all of that to say, I think we'll see companies pointing, and looking to that methodology to kind of answer that question that you asked. But Annie, Stephanie, any thoughts on deforestation in relation to food demand, or should we move to another one? Okay. There were a few questions in advance on metrics. And Stephanie, you mentioned the TNFD core metrics, and I thought it might be interesting to kind of hear your perspectives as well on perhaps specific metrics that you're looking at, or any reflections on maybe the confusion or space right now in relation to biodiversity metrics like mean species abundance in PDF and things like that, right? How is that important to you? Are you paying attention to that? Or are you more, for example, focused on land use change metrics as a starting point while the biodiversity metrics get a bit more established?
Yeah, I can jump in on that one. So you sort of have the 5 drivers of biodiversity loss within TNFD have their own mapped metrics, and then there's this sort of slight wildcard extra category called state of nature, and that ends up looking a bit more at the sort of biodiversity footprint type metrics, which are these things like mean species abundance and potentially disappeared fraction and so on. So I'd say with those latter ones, there isn't a lot of sort of coalescence or decision around like what is the one thing that we should be looking at here, nor is there much data at this point in time that is specific enough when it comes to geolocation or asset location data for companies to then make sort of very concrete assessments of what that sort of on the ground biodiversity footprint looks like. So that is to say, I think they're very interesting metrics, those sort of broader biodiversity ones, but there is still quite a while to go as companies understand their own footprints and then investors can interpret those. So I know sort of certain countries have more or less emphasis on biodiversity footprinting. So France being one that's a big advocate, but it's, yeah, I think early doors still, and we're monitoring and thinking about how best to use them. But I would say that our focus, I suppose, is much more on the kind of company output type metrics. So what's going on in practice in terms of what volume of water they are consuming from water stressed regions, what proportion of their, I don't know, their commodities that they're sourcing come from deforestation and conversion free land and so on. So I suppose those end up being more concrete at this point in time for us to help assess, and so would orient our analysis, I think, more proactively around that at this point. That being said, that may well change as this matures, and it is quite an exciting time for it.
Thank you,
I know we're about out of time, but would just echo that. And then I think our approach is to essentially encourage companies to undertake a TNFD style assessment, whether that is completely aligned with TNFD or CSRD or any one of these other alphabet soup biodiversity related standard setting bodies, and just get a sense of what's going on, what's most material in for their company, but in their supply chains, and then start to hone in on the biodiversity metrics that make most sense from there. And we're eagerly anticipating the release of the science-based targets for nature kind of biodiversity metrics, and we'll look forward to engaging companies on those when they're ready.
Thank you so much, Annie, Stephanie. Bella, over to you to close us out.
Thank you so much, Monique and Annie and Stephanie, for sharing your insights today. We definitely appreciate it. And of course, this recording will be made available to all registrants and participants, so they can definitely review some of the great points you mentioned today. So thank you all for coming today. I've just put this slide up so you can know a couple of our upcoming events. We have our 2024 Higher Education Climate Leadership Summit happening next month in Long Beach, California, as well as a few member-only convenings that are happening virtually in the upcoming months. So we hope we'll be able to continue to engage with you. Thank you again so much for joining, and everyone have a great day.